Welcome back to another episode of our Wyckoff crypto discussion. As usual, today we will study the crypto market through the lens of the Wyckoff method. This information is for educational purpose only, is not an investment recommendation. Please stop the video and read the disclaimer. So we have just launched our Discord channel. In early February, here's the link to join our community. Here you will find our marketplace on Bitcoin, crypto indexes, altcoins, and so on, almost on a daily basis. This is also a great place where you can discuss about tactics with other traders. And in this month, we have received so many kind comments from you. We are so grateful to all of our followers. So please keep sending your charts, your observation about the market, and so on. Now let's discuss about the market. So the Nasdaq is still in a trading range. The selling activity that we have seen in the last week is part of a rotation process that has started many months ago, and Bruce and Roman have discussed this rotation in their Wyckoff market discussion. Institutions are reducing their exposure to tech stocks in order to rebalance their portfolio and rotate into small caps and other sectors. This selling activity causes a trading range, generally a reaccumulation trading range. We are now at the support of this trading range. Some demand is already emerging, but we are still in the consolidation and we have to wait for a confirmation signal. So the selling that we have seen in the last week has affected Bitcoin too. This quick sell-off has been probably triggered by the news cycle about Bitfinex, but as usual, what really matters to us is the structure. What do you see here? A change of character after the climatic run into 40,000s. A big structure develops. The sentiment during this range is still bullish thanks to the Elon Musk announcements at point 1 and 2. Then price advances on small spreads and light volume at point 3, and then it falls back into the top of this huge structure. We have discussed this scenario several times using the analog of the stock market, and if you compare these two charts, the structure of Bitcoin is almost a fractal of the structure that we see today on the Nasdaq. So what do you expect right now? The Wyckoff method is based on this sequence: action, test. The last two down bars on Bitcoin have high supply, but when you look at the effort versus result, you can notice that some demand has emerged on the top of the previous structure. Who has bought at this point? Strong hands or weak hands? We want to see what kind of test we will have in the next days. The amount of supply that will emerge on the test will give us more confirmations about the quality of the demand that came in. So we expect here trading range, and we'll discuss the structure in Intraday too. But before that, Roman, your thoughts.
Well, maybe even a question. I mean, if as you're comparing these analogs, and I do like this. I mean, like you kind of have to think about this area as the rise here, this kind of like a vertical absorption after the breakout. So then we're potentially here in Bitcoin. Is this correct? Is this how you see it?
Absolutely. This is what I see, Roman.
Okay. Yeah. So this is in line with my thinking where we do have a change of behavior that is a different behavior from what we've seen on the previous reactions. And then that leads to a trading range. And we could have potentially, attempt to go up and retouch this area right here. And it might not happen. It might just, be a low or high. It just all depends on the intensity of the demand presence. And we still see quite a lot of demand. I mean, Bitcoin went down below 50, and then look how the volume signature expands, and there is somebody's buying. This is not to say that it cannot fail. I mean, like it could potentially go and create another low, right? So for instance, we're seeing this buying climax. Could we possibly have another low and still be in the structure? Yes, we can. So those type of moves and smaller swings are much harder to think about because they are it's much harder to anticipate them. But if you think in the overall structure, like what are the scenarios, what are the possibilities? We could consolidate, that's number one. Secondly, we could still have some kind of lower low and then consolidate and go up. But predominantly, and Alessio keep discussing this, even though we hear a lot of this is a distribution type of talks, I don't think that we're seeing anything of the distributional quality. And Alessio is expressing the same idea that there is no distributional volume that's coming in. There is a profit-taking type of volume supply coming in, and it produces a healthy reaction, which is, change of behavior that goes into the trading range and so on and so forth. But so far, no distribution. All right, well, with this,
yes, and profit-taking, we have also to keep in mind, Roman, that profit-taking speculative assets like Bitcoin generally tends to look very dramatic, but you always have to have the big picture in mind. So this is very fascinating point, structural point for Bitcoin. So this is the intraday chart. So we see here first attempt to buy, look at that big demand tail, then supply decreases, a lot of volatility on the bottom, and price is testing the 52 level. I think it's possible to have, for example, here spring over the 48 level. My tactics here are very short-term oriented because we could still be early in the formation of this trading range. For now, we see that supply is quite exhausted, but I really would like to see at some point, for example, price holding at this level and then committing above the resistance. So we have to proceed step by step, confirmation after confirmation. Your thoughts, Roman?
Yeah, so first of all, you have to think about the height of the trading range and then, the levels of where, let's say, the price have stopped, to the downside, to the upside. So you would be thinking that this is where the price would reside for the majority of the time between those boundaries. Low suggests still some weakness, so that weakness has to materialize somehow in the structure. So it could materialize with the failure to continue to the upside. And if we stay here, that failure could, as Alessio has said, either strain in this area or even, a retouch on capitulation by some hands of the lower support right here, and then continuing to the upside and kind of creating the symmetry like this and then up. So that's a possibility as well. This is the problem with the structure when it's in, let's say, entry in phase B. Phase B is usually going to be, very volatile phase with ups and downs. So it's really, really hard to anticipate. The best strategy throughout the trading range actually is a short-term trading strategy where you basically do oscillation of your trades around the areas of the resistance and the support. So for instance, something like this was a very interesting entry with an idea that you're going to have a very short-term oriented swing. And somebody on the Discord was talking about some scalping. So this is not necessarily scalping, but it's in line with that intraday trading. So you could definitely, produce this type of trade. And then when we come to the resistance and let's say in the upthrust manner and the price is being rejected, here is your point of entry for the short-term swing trade, let's say either to this area as target number 1 or to this one as target number 2. But those are more tactical things that you could do on the intraday level. For us, it's all about a larger structure. I think the key here is that we did have a change of behavior. Now we are in the trading range, and it's going to be volatile for some time. That's it.
When we talk about a trading range, we are not necessarily discussing about a conventional horizontal structure, because this is a low liquidity market where generally we see 3 kinds of structures: random formations, distribution on the way down, or vertical absorption. So this is another analog that I have published in our Discord group a few days ago. We have studied this price action in our workshop, the Wyckoff Crypto Special lesson number 1. And I think that students remember this structure very well. In both cases, we see here a significant event that generates short-term volatility on the top of the previous structure. So look at the trading range that we have seen in 2017. Price falls back to resistance, but supply is vertically absorbed. So we have to keep in mind that this kind of structure is not very usual in the stock market, but they are very, very common in the crypto environment. And if you look back at the history of Bitcoin, you will find this pattern over and over, a structure on the top of another structure. There is a nuance, however. In mid-2017, Bitcoin was leading the crypto market. In 2021, Bitcoin is lagging. All the money is currently in the altcoin market, and laggard assets tend to have slightly bearish-looking structure. For example, here we could see a lower low in the same structure of Bitcoin. So I think that this analog is very interesting. And what do you think about this, Roman?
Yeah, I really like this analog. I mean, like, it just structurally shows the same type of unfolding of events, and the way how this particular area shows the honoring of the support, which acted before as the resistance. So, and still, when we would be looking at this move up, we would be thinking about all of these reactions, and then obviously the largest reaction, or larger reaction, is going to be showing us a change of behavior. And as Alessio has said, the resolution of this type of change of behavior could be quite quick. So this is more of the vertical absorption into the feather, and don't worry about this terminology. For those of you who have taken my course, you will guys know, and then the momentum out of that. So I could definitely see that could be a possibility. But as we are discussing, the whole idea about different type of scenarios, please keep in mind that we need to see a specific price action to validate this analog. And I think this is a really, really important point that Alessio has put here. So I just want to reiterate that.
Absolutely. So these are the crypto sectors. I like here the aggressive demand that came off the bottom on many of these indexes. And look at the DeFi index. Someone in the group has asked us, could this rally be just a dead cat bounce? Well, it could be. So what's our strategy here? If after this strong momentum move, we make lower highs on decreasing supply, that would be a concerning sign, at least in the short term. If we make instead higher highs on decreasing supply signature, well, that could be a successful test. And after that test, we want to see a confirmation bar to the upside. What do you think about this scenario, Roman?
Yeah, sure. And again, it's really hard to trade trading ranges in a sense of like the efficiency. When you trade a trend, you get into the position, you increase the position size, you follow the trend, and then with the first signs of either deterioration of the trend or a change of behavior, you scale out or you exit the position. In the trading range, it's a completely different story. You have to be much more short-term oriented, so your number of trades increase, and therefore the number of mistakes increase, proportionally to the number of trades. And then you have to be much faster, and so on and so forth. So the tactical advice that we usually give our students is to wait out the trading range to unfold, and to wait for You know, if you had an emergence of the supply and supply has come in, wait for testing. And that's what Alessio is saying, right? So, but how this test is going to take place, what kind of shape it's going to take, we don't know. And, you know, we just maybe a short-term projecting some of the moves, but in reality, the biggest idea here is that, you know, it's a trading range and it's going to unfold in its own way. What is interesting to me on this all four charts, you know, beyond the change of behavior that we're seeing here, is that, for instance, DeFi actually has been in the structure already, and we were thinking, okay, so this is the structure, and this appeals to me a little bit more. Why? Because look at all of the points here. This is a failure, but look at all of the points and how they're being respected. So I wonder if we are failing here, and failing here. For those of you who are thinking that this is a bearish scenario, that is the scenario. This could be a sign of weakness and then last point of supplies. So how would you act on this, right? Again, we don't necessarily want to predict here. We want to follow the market. If the market is going to start showing us that supply is coming back into this area and the supply signature increases, so selling increases after the failure of the rallies, then you should be considering that this whole thing could be some kind of, you know, intermediate stop in action and a much more meaningful pause. But if the price is just staying here, consolidating, and supply is being observed, then there's going to be continuation. So I hope this kind of like, you know, I hope this is understandable. And one might be thinking in different terms, in terms of how we should be thinking about this. But, you know, for us, you know, we look at the structure, we look at the scenarios, and that's what we're seeing right now. Alessio, I don't know what else to add to this.
Yes, we have the same DeFi index chart on the next slide. So I think that we can show the whole structure in a proper
Well,
way
would you
here.
be thinking here about, let's say, an upsloping range like this?
I'm not thinking about a distributional range, to be honest, because I do not see a lot of distribution activity on the top. Basically, the selling here is some kind of like some institution, crypto fund is selling.
Well, there is a
on the
lot
way
of
down.
movement of coins right now, right? All that stuff, we're seeing this in the news. And if you look, you know, Alessio was saying there's no distributional science. So profit taking, right? Why is this a profit taking? Because there's only one bar where they sold, and then it reacts really quickly to the upside. Okay, another selling, very logical at the top of the channel. So, but not as much. Then another selling, so kind of reminiscent of the first selling. Then some selling here, less so, but more than what we've had here. So therefore, a better reaction to the downside. And then we have this kind of like a more pronounced selling. But again, we're stopping at this level. So just wait. You know, there is really nothing to do right now but to wait. Alessio?
Yes, absolutely. So this is an intraday chart. So I think that intraday traders can really enjoy this big trading range, because this is a big trading range. If you look at it in terms of percentage, there's still money to make here. But if you are kind of campaigner for long-term structure in the altcoin market, I think that this is a tactical point where you want to wait and look for signs of confirmation of the big structure. So, and for example, this is a beautiful chart. So we see here band, and this is a 3-day charts. I think this is a very important connection moment, a structure moment, where you really want to look and scan the altcoin market and look at these big structures, big time frame like this one. So what do we see here? We see a first accumulation range, a huge uptrend, And now we are consolidating in this big structure, and this is a logarithmic scale. So the last 2 bars to the downside are quite dramatic if you look at this structure on the arithmetic scale. But the same structure is quite not distributional on the logarithmic scale. So I urge you to look at logarithmic scale when you're trading crypto, because logarithmic scales have a lot of secrets. What are your remarks on this chart, man?
Yeah, I like these 2 bars. So all of the price action is contained within these 2 bars right here. If we would have more of the distributional nature, we probably would just commit below this. And every time we try to do that, we fail to do so. Lower volatility in this area also suggestive that there is no more selling. So some selling came into the top and then on the change of behavior. Then we're seeing some buying. We definitely would prefer the price to go above it. So right now, we just, again, same logic, same idea. What's going to happen here? Not trying to predict or anything, but just trying to see how the structure is going to unfold. Is it going to unfold as a kind of like a smaller trading range with lowering of the volatility because some supply has come here, and then the breakout? So then the breakout would act as your confirmation that we're having a continuation. If we are failing to continue to the upside, then how would that look? Well, this is the last commitment to the upside. This is an attempt to disconfirm that commitment to the upside. If we're going to commit below the low of this bar, that would suggest that we could go to the support area. That's it. That's all she wrote.
So this was a submission by our community. And we see here 2 charts, the same asset, arithmetic scale, and then log scale. And I always recommend to look at both charts because especially low caps and illiquid asset generally have logarithmic scale. So what do we see here? A multi-year accumulation structure and a spring, not a major sign of strength, there's a mistake on the chart. After that, major sign of strength, backing up action, and look at the scale here. It's a huge trading range. The sign of strength itself is a 10-bagger move. After that, we have a backing up action, and look how orderly this uptrend looks on the logarithmic scale. The same price action is very scary when you compare this asset with the arithmetic scale. It looks really nasty. So you have to look at both charts and make your judgment according to the scale. Your Max, Roman.
Well, I think it's very important, and this is a really good visualization of this idea that when the price moves so fast, you have to use the log scale. So that's number one. Secondly, let's say that you're using arithmetic scale, right? So maybe you forgot, maybe you didn't know. So how would you judge the reaction? So as you come to the end of the move, you assess the incoming change of behavior based on the actual last commitment to the upside. And you could do this every time, right? So here it is. Here it is. You kind of see, even though this bar looks so big and looks so bearish, but in terms of the actual, let's say, volume signature or the way how the change of behavior happens and to where it goes and where it stops and where it becomes, buyable again, we don't see a much more kind of like bearish look. We would have more bearish look, let's say, somewhere here where this last commitments to the upside are being negated like this. And this would be suggestive of the reaction. So that is a different picture. So therefore, you could use arithmetic scale, but you really have to be versed into how to analyze those spots. So it is better to see it on the log scale. So I absolutely agree with Alessio here.
And this is the same chart on the intraday logarithmic scale. And look how beautiful the uptrend is respected here. So for example, I think that now we could see potentially a retest of the support line here of the uptrend. That could be a very nice opportunity. Of course, this is kind of spring action, so we have to see the test, and after the test, there's the entry on the confirmation to the upside. And these are big structures, big uptrend, and I think that in terms of reward risk, well, this is a huge trade. So you have to be very precise when you trade this illiquid asset. What do you think, Roman?
Well, yeah, precise, and at the same time, I mean, like if you have just a structural idea of what should happen in this area, so let's say like we are waiting for the test, you could just come into this position, and if you're a long-term investor, just hold. I mean, like something would happen here, right? So test, test. If you buy, let's say somewhere, you're saying like, this is the level where I'm gonna buy, and then I'm not gonna like go into 1 minute and try to figure out what was that last bar where I should enter. So entering in the vicinity of the correct entry is also a good strategy on its own, and quite possible that it's going to happen the same way here. All right, Alessio, we're done with today's session. Final thoughts?
Yes, we're there. Well, I think this is a very interesting structural point for the market, so we'll be very active to comment this point, and we are so grateful to all of our followers, so please keep sending your charts. We love to receive your observations.
All right, yeah, and with that, thank you so much, and until next week.